All right, good evening, everyone. Welcome to the PUG session. I deeply apologize for the last meeting, which was canceled. As many of you know, it was a emergency situation, and we found ourselves with our loved one in the hospital under not so pleasant circumstances, but everything's fine, and we'll get through there. We're going to go through a couple special announcements, and then I'm going to make a couple things that people were interested in about the difference between the levels of service and what the VIP and the PUG group is, and I'm going to do that at the end. So for those that are here just to learn about special functions and features, we're going to do that first, and at the end I'll explain the different levels of what the PUG VIP is about, as well as upcoming special releases that are coming. And we hope to have it by before 2017, which, believe it or not, is not that far away. Once we get through the rest of September, we've got October of volatility in the market, yay-hoo. Then we've got the elections. That ought to be a thrill. And then we got the holidays, Thanksgiving, Christmas, and then we're here in 2017, and I remember the new millennium and Y2K, and I say that line every year because it's just amazing how time is flying. But we are having this our seminar next week, and we have a wonderful crowd, and so obviously we'll be discussing three specific platforms: TradeStation, duh, right? Thinkorswim, and Genesis Trade Navigator. Those will be the three platforms that we'll be using at the seminar. So these will be what we'll go over at the end tonight, not the beginning, the end. So that way we'll get right into some education and some neat stuff that we're using the platform. So what I've done in for a number of years, since 2010, some of you are familiar with this thing that we did with PA Stock Alerts, where we had a pretty outstanding track record for 5 years going. My partner and I split, and anyway, the long and the short of it is I started to develop just the weekly thoughts, and the weekly thoughts just generated into my writings. I've been doing that since for stock, putting in writing for the room back in 2014. Well, I just wanted to share it with something, because some of you I know do receive the weekly thoughts. And just the first thing I'm going to show you is just a copy of what the weekly thoughts look like. This is not anything other than just a format. And I just wanted to show you what the weekly thoughts are. We have, of course, I put out the pivot, support, and resistance that I feel the market's going to have, quarterly pivot resistance, my ideas on the market, technical points of interest, as you can see, different things that I look at, which, by the way, are all contained in this trading system that we have in TradeStation. So the little bit of a track record, I'll go over that in a little bit. Trades to look for, and this was kind of this week. Where do I get these trade ideas? And this is the reports and event and everything. It's nice and clean, and it's, reports, earnings, seasonal spreads. Many of you have seen this. September seasonal trends of the month, strong, weak, meaning up, down, etc., etc. So it's not something that I would say it's a retirement month on, okay? But I am going to share this with you. I started not really tracking the trades because it wasn't a specific advisory service. It was just a general guideline. But I wanted to share this with you because I said, you know what, I'm going to change gears, and I am actually going to put in, I'm going to put testifiable trades. I'm going to sit down on the weekend. I'm going to filter out some seasonals. I'm going to filter out the volume. I'm going to look at some high probability, which means they're probably going to work out, high probability. And I'm going to define the risk. And then I'm going to use the indicators and see how we do. So we started in August, and August was kind of a tricky month. I'm not going to lie to you. We had a lot of phenomenal picks. This is one of my most embarrassing picks of all. BOFI Holdings, which is trading at around 22 right now. Why is it embarrassing? Because I got out because it didn't break up in a 60-minute fast enough, and I raised the stops. Bed Bath & Beyond. So anyway, the moral of the story, as you can see, for a weekly event. Now, this is not a fund management system. This is something I put out every week, and here's the best part. It's $49 a month. So you guys don't need this, but if you get it, that's great. And you might enjoy my comments, but I want you to know that every single trade that we've put out, which means not fictitious fills, real fills, is all been generated by the platform. Now, these are done over the weekend. Now, many of us know in real life trading, a lot of good trades come during the day. A lot of good trades come on Tuesday, maybe on Thursday. At the end of the week, I look for some high probability trades, and then we do what? We put out where to get in and where to get out. What are our entries and the exit. And so it's kind of hard to put, and I just wanted to explain, this is not to brag, but just to show you that this is something that's achievable with the system. And I think it's pretty good to say, if the system's any good, does it make money? Well, it's not a system per se, but it's a package put together that allows an individual to construct sound trading decisions. You know, we had one little nightmare on Express, and it really wasn't that bad. But between the longs, the short stocks, and some optionable trades, and a lot of missed trades because they just didn't get filled, it's not a bad percent rate of return, and it's not a bad performance. Of course, it would be really nice to have just bought Apple, which we talked about in our trading room the other day, and I just simply said, you know, there's a gap below the market. It's trading in the 102s. The next day it opened up at 105. I said, this is kind of a tough trade here, guys. And besides, we were looking at Clovis. We were looking at high close doji on a 60-minute basis on Google. But I thought I'd just share with you what I've put together here. And, I think it's something that whether you're an active trader, whether you're a passive trader, the system and the analysis, it's working, okay? So first and foremost, what I do nightly, religiously, is I go through and I look at my scans. And now, if you don't have the exact same layout as I do, let me know. We'll work on that. If you're a VIP, you know you get scan number 5. Scan number 5 was just simply putting together the volume and putting together the histogram component part. Now, I did not run scan number 5, as you can see, because I do that, as you can see right here. This was run yesterday. I find it kind of funny. I only run scan number 5, by the way, on S&P 500. When I feel like I want to choose, and that's one of the neat things, when I feel that I want to choose a specific index, then I will change up, but I won't run all the stocks. And if I'm looking at, and I think you just caught me looking at regional banks too, I will run a scan on regional banks on scan number 5. Yesterday was kind of an interesting scan to come up with a buy signal in Activision, which the buy signal came yesterday. Not a big move, but $1.50 to the upside. Skyworks Solution, a nice little pop to the upside. Tiffany's, ironically, was another stock that we had picked out based on a high close doji weeks ago, relative to the rest of Signet Jewelers, but that's another story. And of course, scan number 5 kind of worked pretty well. This was run yesterday for today. But what I do day in and day out is, the first thing that I like to do is I like to see, and as you can see tonight, we ran it 9:15. Every day I run my scans. And buy number 1 is, just as a quick review, you guys know what this one is. Buy number 2, daily buy near support when weekly's in a buy mode, which means the weekly's in a buy mode, the market pulled back to support, pivot support, and we would get a buy signal. Based on today's whole price action, there's not a lot of criteria or stocks that met that criteria. And certainly not a lot of stocks in that sector. JCPenney, which was something that we actually covered today because we started to see some of the retail stocks populate. Now, this is telling me that the market today, it just kind of probably backed off just a penny or so, but it's warning us that JCPenney's is going to be in a weekly buy on Friday, by the way, tomorrow if we close here. So that's kind of an interesting concept that I can take a look at whether or not I want to get in, and I can take an exam of the market and choose, especially when I see a consolidation or concentration of a lot of stocks in that sector. Now, I typically have everything we built on every single page most of the time. In other words, I have the last, let me just bring it up to your attention. I have what I believe is a very powerful tool, the last conditional change, bullish and bearish. And bullish would be the white line, bearish is the gray line, right? So the market, if it's bullish, the white line should hold support. And that's where we could also look to buy near retracements of that big white line and then use that as a stop. X generally is the symbology for a stop, right? High closed doji, low closed doji, OBV, my volume indicator, the triggers. If I'm a daily chart and I'm looking, or a weekly chart with stocks, I have monthly pivot, and of course that's why I have different pages up, right? So I'll have my daily page with maybe the weekly pivots, and I think that's important. I'll have my weekly with monthly, and I have my monthly with the quarterly pivots. And to me, I love, and this is a pretty good lesson, something that this would be a shameless plug, I will admit what I'm about to say, what we will cover at the seminar next week is defining better trades when a market is above the pivot. That's a very important idea of getting a buy signal above the pivot. You know, if you've ever taken any of my courses, many of you have, or you've read my book. I don't know which book I should grab, but it's probably in every single one. And I bet under pivots, or at least in a bullet point, in an extreme bullish market condition, the pivot point, which is blue, will act as support. In fact, day trades. Let me get back to this page, and I'm going to go over to day trade. And I'm going to use a 15-minute chart for day trading. All right, so Apple's pretty important. So key area. If we have a blue below gold, blue under, if blue is under gold, it's a bearish day. And I do have defined rules of when you look for actual buy signals on a bearish day. The market gets above pivot. And you usually break out above a last conditional change. So when you still have a bearish day, like you can see this day, blue is below gold. And you can see that the market starts to trade up through its pivot. And then blue is still below gold, that it gapped up. And this is the day it was kind of a risky trade because it was like you got this gap below the market. But still, blue now changes to above gold. If the market's truly bullish and it's going to change, you can take these short-term buy signals when the market goes from under the blue to over the blue. And that is a generally good, now with certain stocks, when you have narrow range days, you're probably not dealing with the greatest amount of room once the market crosses from pivot to the red line of resistance. So for stocks, I use that technique using the weekly pivot. So if the daily chart and the daily market is above the weekly pivot point, which is the blue line, when we get above the weekly, then you could buy, except for in a situation where you have a gap and you say to yourself, boy, if I buy here and I want to put my stop under the swing low, do I want to have a $6 or 6% risk in a stock? And then you'd probably, like I said, no, I think I'll take a pass on that trade. After all, we're pretty close to resistance, and, you know, it got away from us. And you know what? Those things happen. So personally, we did not take a long in Apple. Just letting you know. I don't think it's not a big deal. We've had a phenomenal month, phenomenal year. It's been wonderful to use these tools. But I'm going to give you the example for day traders using E-mini S&Ps. So in the trading room, what we do in ES, because there's a lot of, obviously, a lot of people use the E-mini S&Ps to day trade, right? Look at case in point. You got this little high closed doji in the market's just at pivot. What do? Well, the market starts to break out and takes over. And in fact, today we did have a little breakout in the market today for an upside play in the trading room, which was kind of nice. But when the market gets above pivot, if the conditions warrant that it changes from blue below gold, there's a way that you can take breakouts. And what that is that the market, if it's truly bearish, the market has no business above pivot. If the market's truly bearish, it's going to stay below the pivot. That rule of thumb is going to help you out an awful lot. Case in point is right here. The market had a quick breakout and then it failed, and it stayed below pivot. And what did it do? A huge defined trend below the pivot, the blue line. Now, I'm sorry for the drawings. I get carried away. Case in point. The market breaks the pivot, and you know, if the market's truly bullish, it's going to stay north of the blue line. If it's bearish, it's going to stay south of the blue line. So breakdowns, and especially looking at the location of that pivot in trading, technically speaking, is critical. In addition, we like to look at a couple other things. What's the direction of the volume? What is the direction of the momentum indicator? So if you are looking at a market to move up above pivot, is the momentum indicator moving positive? Is volume moving up? If you don't have the person volume indicator with the VIP package, not a problem. We have the OBV. And the OBV signifies that the market had some pretty good clearance to see follow through to the upside. So let me get back to the scanner. And I just wanted to define that when we look at trades, whether it's a stock, a longer term trade, like this would be a monthly chart, and this is JCPenney, we're trading now above the pivot. The short-term rules that I just shared with you apply to higher degree time frame rules. So when you get a short-term daily buy signal or an intermediate term weekly buy signal, in order to figure out where a stock might go, ask yourself, where the hell has it been? Where's it coming from? Where is it in relationship to the pivot points? What do the indicators suggest? And in this case, looking at both and I'm going to bring, sometimes we have to do this with on-balance volume, and it's something that has been happening both in TradeStation as well as even Thinkorswim about the formatting of the scaling effect. I have no control over that, but it is something that doesn't quite work. It doesn't. We don't have that problem using the volume indicator here. Anyway, if you look here, how do you define good trades? To me, a good trade, the first thing I say is, what's my risk? What could I lose if the trade goes wrong? Second off, what do the indicators state? And again, while this is a monthly chart, and this would be at the end of September, it's warning us now that, guess what? If we actually close above this gray line, right, which is 975, I believe, this would close above a last conditional change. This would be closing, and maybe we can get a positive reading on the volume, and the momentum indicator is perking its head up above the zero line. This would be a positive indication that we're starting to see, over a longer period of time, accumulation, and that the stock might be getting ready to launch a little bit. So I would be looking for a change in the monthly indicator and saying, gee, if we clear through resistance, especially last conditional change, That would be important for me. And then to say, do I want to commit capital to this trade? Obviously, if we get a monthly buy signal, you're not looking at a day trade, right? Unless you get in and it screams in the same day that you get in, and rallies on a takeover or something, like double, like goes from like 10 to 20 overnight, which is very rare, but stranger things have happened in our world. But when we take a look at the indicators, and just all I do is I look for, what do the indicators look like? Do we have volume convergences? Do we have momentum convergences? Is the market have an applicable pattern where it's rallied, it's pulled back, and it's getting ready to break out again? Those are all important. And then I'd say, okay, if I buy this thing at 10.10, if it gives me a weekly buy signal, or if it generates a buy signal, where is it in location of pivot? Resistance is way up there. It's above the pivot point itself. And this thing has now cleared trying to test the low end of the range, and now it probably can expand to the upper end of the range. So that pivot point, the blue line, has been critical in identifying decent, good, high probability opportunities. The same could be said on the sell side here. You get a low closed doji, and then you follow it by a sell signal. And look where the sell signal is, guys, below the pivot. Do you trust that in this time frame? Hell yes. So those are some subtle nuances that I hope do not get lost in translation. That's why they're there, and that's the importance of the scans, that when we say, am I getting a buy signal near pivot, or am I getting a buy signal that the daily is in tune with the weekly, and what does the monthly look like? That's why these three time frames, it's no mystery as to why the three time frames are up on the charts. Okay? So Jim's asking a quick question. Can I review a 5-minute chart on the Qs? Be more than glad to. Let me set it up for you. All right, so here's our 5-minute chart on the Qs. This is a regular page, does not have the volume indicator, just the OBV. So as soon as we come into looking at a 5-minute on the Q today, the market starts, Jim, I just kind of went over that concept about the blue line, and the first thing that I see is that the market is done what on a 5-minute basis? It's in a buy mode. You got high closed doji, you got high closed doji, which is identified by orange candles. Now, let me bait and switch you here for a minute, okay? Just humor me for a second. One of the trades today was to look at the 60-minute high closed doji for Google. We gave this in the trading room today. And I distinctly said, yesterday we had, and I'm gonna just go through two things. So the concept was pivot. If the market generates a buy signal or a high closed doji above pivot, we have a chance to launch. Sometimes the markets change and we will blow through these pivots, right? So on a day like yesterday, the volume's looking pretty decent. We have a volume convergence, the momentum histogram, and yesterday I said, hey guys, we might get a high closed doji above the pivot, and if I said it, great. If I didn't, doesn't matter, because we have an opportunity for the market to maybe come back and fill a gap and get up to that moving average crossover. And the real concept is if you buy here and then in the next two time periods you get no resolution, LMO, and I'll type that up, LMORFN. And it really stands for let me out right frickin' now. And what are the rules of a high closed doji? After two time periods you do not see positive performance, get out. Now if I'm dealing with a 60-minute chart, am I using an October expiration, or am I using, if this for example was Wednesday, would I be using a weekly option looking for an at the money or slightly in the money option to capture a move like just a stock replacement. If I'm looking at a 60-minute high close doji, I'm looking at an in the money option and I'm looking for immediate results. If I don't get immediate results, get out. Well, guess what? It didn't work, got out, lost a couple pennies, market went down. Okay, walk in the door today because you're asking almost the same question, the same concept, Jim, which was fantastic. Thank you for asking that question about the Qs. And looking at Google, I said the same thing. Hey guys, first hour of trading, we stand to do the same thing. And if you're interested, take that high close doji and do this one more time today. And it happened. One of the things we were looking for was a move right up to about the 175 level. And you know what? It didn't quite hit 75, but it hit damn close. So from around 66 up to around 74, if close, bail, right? It was a nice little trade. I actually did this trade. This is something that we did and put one of the trades in the trading room. And the concept is, just going real simply. I look for, many of you have as a VIP, the daily HCDs that we coded up there. Or in fact, a lot of times you will see the 60-minute, and if you go over to short term, your interval, and all you got to do is just go up and down and just scan for new fresh warning blinking. Blinking signs mean that it's going to form a daily high close doji or a 60-minute, or go over to the interval page and simply change it to whatever you want. Now, I don't want to change it because as soon as you change your time interval from 60 to 15, you know what's going to happen. It's going to take a minute or so for all the data to fill in, and I don't want to do that for tonight's presentation because everything is running as smooth as silk. So I'll go back and answer the direct question on the Qs, and let me get up to the Qs, Jim. But it's obviously Google and the Qs. The NASDAQ 100 is a very a high beta, very correlated connectivity in the marketplace. So I found it interesting when you were asking me. In fact, here, if you look at Google in that first hour launches, you get a buy signal. But when I get high close dojis, and yesterday's the same thing, Google had the high close doji, nothing happened, and it sold off, just the same as the Qs. They have the same direct interaction. So when I see a 60-minute buy signal, to me, that's just powerful information. Now, shorter term, let me just go and humor myself rather than you for selfish reasons. If we look at this, we would have noted, hey, we've been in a buy. It did not form a traditional high close doji within the 3 bars, but it was in a buy signal, and it's white line after white line after white line, white line, white line, which stands for what? Trend. And it stands for short-term jump on the trend. And that's a pretty powerful indicator to use for short-term trading. And then as you see the market rallying here, the best of the trend of the day, it starts to stall, then guess what happens? The momentum is starting to tell you, hey, the trend is weakening. This is a time to scale out. The market pulls up, you get a lot of chop, you get into that consolidation, and all of a sudden the momentum starts to go back up again. And then it starts to fail, and then we got in a sideways, and then it starts to go up again. So in essence, to looking for trading opportunities, what I started off tonight with was looking at the scans, and especially looking for scans or trades when the market is trading above that blue-gold relationship. Today just happened to be a daily buy setup for Google, and it just so happened, if we go over here, blue was also above gold. Blue is above gold. And so we'll get back to your distinct question, which was, if you have a chance, would you review a 5-minute chart on the Qs for the day? The different support and resistance, the pivot, LCC bullish and LCC bearish. So, A, blue is above gold. That means it's a positive bullish day. On a positive bullish day, we include R1, which is a fine, thinly dotted line, and then R2. You'll notice that there is no S1 or S, in this case, this is S1, but notice that we don't have a fine line of S2 because it's not applicable on a bullish day. If it's a bullish day, it should have no business being below this zone. So that's the nature of the mathematics behind it. So coming into today, you had an idea that the market may be somewhat beneficial. If you're looking and we go over and say, okay, if you personally are target trading and you come in and you go, tomorrow's bullish, let's take a look at the OBV. Let's take a look at the histogram. The histogram at this point in time, market's going up and the histogram is solidly looking strong. It's not diverging. We're green bars and it's solidly looking strong. Volume hasn't crossed over at this point in time. We're trading right now about right on the open. Let's double check. Here we come, and there we are. We're off to the races, and we start to get a what we call, or what I consider an X factor. X factor is when we get the OBV crosses back above or crosses below. X factor. A crossover, the market starts to see crossovers. You start to see a change in the momentum of the market. When you get a buy signal or a sell signal and you get that change of guard, and that's why we have the moving average there, then you can say, you know, we got a change of the moving average and there's a volume picking up. This might be more meaningful. We're above the pivot on a bullish day and we have an idea that the Qs might get up to there. That's your setup. Now you could say, well, where do you think I should buy this? Well, you might want to buy it somewhere. Maybe you want to buy a breakout above those little highs that we've pointed out, but whatever you do, would you agree that your stop should go below the white line? That's the first thing coming out of the box. Quick decision. Look at this picture. Let me get rid of my writings. And this is a great question because this is exactly what we need to do to learn how to use the tool more efficiency. It's real simple, guys. You need a little bit of knowledge of these advanced tools. And with the right understanding of these tools, with the right understanding, the power you possess in having great trades consistently is incredible. And with that, knowing that and having that confidence, that's what's going to, the only thing that can hinder your success is your inability to pull the trigger. I mean that. Each and every day, there's trading opportunities all the time. I do them in the trading room. I give setups every single day in the room. I put everything on the line, just as I'm telling you right now, as I've experimented and learned every different indicator. I generally get, and I'm sitting here full of a room full of my constituents, and I would have to say clients, more importantly some friends, that see me do this day in and day out. And consistently, here's what we're looking for. And everything I do is based on what you see here. I don't have an alternate ego. I don't have a different methodology to trade. It's real simple. I look for breakouts above when the market shows it's looking strong. When the indicators are looking positive, I say, you know what, we can look to be a buyer here. And then where do your stops go? Well, most people should know where the stops go. Stops go underneath the bar that took you, that broke out, underneath that low, and underneath the last conditional change. When I scale out of a trade and I trail my stop like we did today, we move our stop up, boom, and guess what happens? Market comes down. If it's supposed to be bullish, it will never see the last conditional change. And if it keeps going, that's what it's designed to do until a new last conditional change sets up. And as you can see, we finally get a last conditional change and the new ones start to formulate. So the one last conditional change here that starts to form, this one is not a last conditional change. This isn't a last conditional. That's not a last conditional change. And this one didn't break out above the swing high. It was a consolidation, so one never really formed. And we didn't get a close above a prior high or here or here. It was finally there and finally here. And that's where you get your white lines from. So that is the 5-minute on the Q, Jim. And that was a good question and a great review. Now the market comes up, and if you trailed your stop to this point and you're near your resistance, you got stopped out right there. So if you bought on an entry and you took that buy signal or you took that buy signal, you were stopped out right here. So either way on the Qs, if you came to the party a tad late, if you looked at that buy signal, bought the pullback, right? Bought anywhere in this zone, I'm going to put a box, more than likely this zone. Maybe you bought here, maybe you bought here, but somewhere in this color you bought on that little 5-minute trend, you were able to participate in that move. Then the market goes up, and that's on a 5-minute basis, and then moves in a sideways consolidation. And now you can say, listen, this thing looks pretty strong, and we're breaking out. Volume is breaking out. Now let me just teach you a little lesson here. I didn't draw a straight line because I can't draw straight lines with this drawing tool. So let me go and get a trend line because this is kind of cool. I want a horizontal line. I'm going to look, no, I wanted vertical. What's the matter with me? So as you can start to see, any time between, as we get that little gold line above the blue line, it's showing, as I just pointed out, that the volume is breaking out. And I think simple trading terms, trend consolidation, the market is breaking out. So if you wanted to go for a short-term trade, here's a classic setup. The volume and the histogram is confirming that buyers are coming into the market. All right? And at this point in time, I got, after a sideways range, a high closed doji. And that's what these, even, it's wild. Even this high closed doji, after 1 to 2 time periods, you'd be like, maybe I should pull the trigger. Nothing happened. You can make the decision, well, you know what? I think I'm going to get out of it. But at least that buy signal with this knowledge and that information, I mean, I can't tell you how much you're going to make, but I can tell you that the momentum is pointing up and that you can be long and definitely not short. All right? So the last conditional change, having it on these bars, to me, is just a gift. It really is. And it helps me to identify where my stop should be. We were short the other day in the room, trailed my stop, boom, went up, stopped me out. Doesn't work all the time. But you want to know something? We make money. Now, for anyone to be consistent, and I think that's the key, and I will say that I'm cheating in life. I absolutely am cheating in life. When I trade, I cheat because I use this. I consider this almost cheating. It almost should be outlawed. I don't know if you guys have found that out yet, but I definitely feel that this is like cheating to me. It gives me stops, buy signals, condition. It gives me everything I'm looking for. And that's what's impressive. If I'm looking for stocks, whether it's a consorted concentration of area in healthcare. In fact, George C., you're here tonight. It's awesome to see you here. J&J. Johnson & Johnson had a little daily high closed doji. It's the XLV, by the way. I think we go over here, and you'll notice something in the XLV. Do you guys see this XLV? 8:15 on August 15th, right? August 15th. Do you see it over here? We did not only an option strategy, right? An option strategy on XLV, but we also shorted the ETF. Look at the day, August 15th. Sounds like a coincidence. Why in the hell would I ever pick on XLV August 15th? What was going on or about August 15th? I wonder. Let's review. Well, let's see. On August 12th, a Friday, you know what happened? We generated, I didn't pick Johnson & Johnson. We picked which Johnson & Johnson is a component of the XLV, but let's go XLV, shall we? Just to humor myself. And I'll bring this into focus. So whether the market goes up, down, sideways, doesn't really matter. We're looking for trading opportunity. So let's look at some of the recent actual trades using the analysis, whether it's a stock, whether it's an ETF, whether it's a butterfly wing. Oh boy, see this is the one detriment of on-balance volume that we have not been able to scale and figure out correctly, and it is a problem that's occurring, or the same symptom that happens on TOS as well as Genesis. So it's not a trade station issue, it's a way that the indicators actually program. But let me get into August 15th, and we'll just take a look here real quick together. August 15th was the August 12th. XLV, I think we had a concentration of sell signals on XLV, and maybe it was on the daily, the 8th we had a sell signal, a low closed doji. We started to break down, and somewhere in here, and based on the indicators showing a concentration, and I bet you if I go to the daily sell signals, no, it wasn't that. It was one of these ideas that we came from in the advisory service that came from a trade setup in the XLV to get short on this. So the 12th, and this was a week later, but I'm not quite sure why, unless maybe it happened. It's kind of weird. It should have lined up. But we did sell based on these indicators and the breakdown. And the XLV pointing off to moves and directional moves in volume, that was one of the best setups for saying, hey, we think that the market in time is going to go down. Now, it's the XLV. It wasn't the greatest trade in the world, but it certainly made money, and we had the right direction in that ETF. So now what I'm looking at here is the ETF is down. Component stocks are down, and Johnson & Johnson, which is what I wanted to get to, is doing what? Let's take a look at what the indicators spell for this particular instrument right now. The market's declined. We have an interesting kind of tall Marabuzzo benchmark, midpoint axis support. We have support here. We had a doji. It closed below that doji. It had follow through. We don't have a weekly buy signal yet. The volume does not say to buy aggressively yet, but the OBV is starting to turn up, and the momentum, as you can see, the bars are getting what? As price has moved down, the bars are going up. So if short, get out. That's how I read that. Now on a short-term daily chart, which I actually tweeted this out tonight. If you look at our Twitter account, you go over there. I didn't put out my complete train of thinking because I said go ask Chuck, which doesn't make sense because Charles Schwab, SCHW, I forgot the SCHW, also had a daily HCD in Schwab. I'll cover that in a second. But here's a potential trade that if I liked healthcare, is healthcare, did it sell off because Hillary Clinton says she's going after drug companies? Is it a political thing? Did it go down because of whatever reasons? I don't know, but I can tell you this. We have a lower low, and I have higher lows, and I have higher lows, and I probably have what I like here is if this market is going to take off, it has a very defined risk after considering this is a daily chart, a prolonged downtrend. So looking at Johnson & Johnson's with the daily high closed doji, it does have some component aspects of a decent, low risk, pretty good high return trade. We do not on OBV, did not get a X factor because we didn't cross above that MA, the moving average, but we definitely saw some buying going on in the market, and the histogram component is showing a little bit of love in accordance to a bullish convergence pattern. Lower lows on price, higher lows on the indicator. So this is not a stock I would say let's get aggressive, but I would say, hey, if I wanted to buy this tomorrow, if it opens up like unchanged, it's a Friday, and I want to give that a nibble, I could be looking at buying somewhere close to 1863, placing a stop below 1732. The white line in the sand, this last conditional change, that would not mark where your stop goes, by the way, identified with the high closed doji. It's 117.32, and you could say to yourself, gee, $118 product is going to require a lot of capital. You know, maybe we get back up and test the 120. I could make possibly $1.40. I'm risking about $1.30, so I'm looking to make possibly a quick $1.40, risking about $1.30. Now, that's just if it gets back up into that zone, which is the gray line, which is a last conditional change. This is a classic John Person indicator package setup, right? So I don't know if maybe it starts to evolve into a trend like this, where you get last conditional change and it just keeps breathing life and it never stops you out, and you just keep raising your stop, and then finally you get stopped over here because it couldn't go anywhere. So getting long and then stopping out over time, it's a beautiful system. So in any event, I think just, and for the record, let's look at SCHW, because that's what the tweet didn't make sense, because I forgot to go ask Chuck, Charles Schwab. Get it? Schwab, Charles Schwab, go ask Chuck. Sorry, it was just market humor. I don't get out much. So let's look at this. The broker-dealers have been kind of, it's an intriguing trade to me from a relative strength perspective and my indicators. We had a trade on E-Trade many weeks ago. I think it was the 1st of August, if my memory serves correctly, because we actually, I think I talked about this in the room today or yesterday. But the broker-dealers are starting to move up. The volume, the OBV's kind of trending up. My volume indicator is not showing a lot of warmth about it. So this might be one that would be a quick little, you know, a stab to the upside. The momentum indicator, you know, it's not a great setup. And the reason it's not a great setup is because this has been in an uptrend, not a downtrend, right? But the sector itself, which is in the broker-dealers, the IAI, it is in an uptrend. Schwab is in an uptrend. ETFC is E-Trade. E-Trade, relative to its peers, has had, past tense, a much better volume consideration. It had a much healthier looking OBV action. It showed more accumulation, and it had a better percent return. Let's look at E-Trade on a weekly basis, and I'll show you what I mean. In essence, when you want to look to see where something's going to go, ask yourself, where's it come from, and what do the longer term indicators look like, right? So let's look. If we know how to use these things, you're going to fall in love with them. The volume indicator crosses over. The volume indicator on own balance volume crossed over much later. The histogram component starts to go positive. Early warning sign. These two indicators confirm each other. On balance volume is a little bit laggard, but it's still a great tool. And so you got in a little bit early on the trade, didn't do any harm, no foul, made money. It's still showing positive performance. Got a secondary buy signal. The momentum is still positive. The OBV is positive. Histogram's positive, and voila, you make a little bit of money. So, you know, if you're long this stock from around 24.5, 24.80, not a big deal. It's at 28.32. It took multiple weeks. As a stock trader sitting there saying, hey, I think I'm going to go with these types of setups, here's the best part. The buy signal comes in, and this is kind of what Jim's asking for. Buy signal here, stop has to go there, don't like it. Next week has follow through. I know that my stop has to go below the white line. Where's the white line? The white line's right there. So here's the white line. I can start to look at the trade maybe down the road as well if I like that. If I'm not committing capital because, you know, we all can't trade everything all the time. We have sometimes great trades will come up and we're committed in tons of other things. So it makes it tough to trade everything all at once. I think it was Monday. I was filled on I think I had about 17, 18 positions on. It was kind of hard juggling balls, all right, to be honest with you. So it was an interesting day. It was an interesting time. And, you know, we go from a period of, you know, having to watch the market and stand on our pins, our toes, and no volatility. And all of a sudden we come into 3-4 days of, you know, some pretty wild moves, and we have to be able to take advantage of that. So I hope tonight's class, I mean, first and foremost, for macro understanding, what's the better sector? What do I want to look at? What looks healthier relative to the rest of the crowd? What's the breadth look like? You know, that's why I take a look at all of this information. For weeks, the Dow looked less compelling to be as bullish as the rest of the sector. And the Dow did the least upside. And now we find ourselves with, by the way, I'll be looking at this at the end of the week. If you don't believe me, double check your pulse, because I'm telling you right now, I'll be looking to see what would happen if we break out and get one more little high and we don't get a newer high here in the breadth analysis. What do you think that would be showing us? About a pretty strong case of what? Bearish divergence for maybe another, you know, little test of this area right in here would be my guess. So a couple things that I would point out to you. It's not, in this case, all Apple. It's another name. And I think we can share that with you right here and say it's most likely BIIB, Biogen. It's also AMGN, Amgen. And I would be watching because, quite frankly, Amgen has an extreme high correlation to the Qs and has a very strong connectivity in its price direction with the Qs. So if you start to see, just trust me on this one for right now. We did a comparative study last week on Amgen overlaid and its relative strength, comparative analysis to the Qs, and it was like it was pretty strongly correlated to the point where actually Amgen was just at times leading since, I think it goes back since about 2013 or something like that. So for the last 3 years, strong leadership and maybe a leading indicator of Amgen to the Qs, which makes sense because it's certainly not Apple or Tractor Supply. So if you're trading the Qs, keep your eye, always have up Amgen and just watch the trend direction. I'm going to change this over to 5-minute just to, you know, back test that. And quite frankly, it had a, you know, you might be able to, at this point in time, buy signal is at, let's see here, 105. Excuse me, 105. Amgen broke out and looked better than the Qs. Look at the 105. Look at the 105. Amgen led the way. It had a better move faster. So that little technique I just shared with you, at least that's working for right now. Amgen seems to be, to me, you know, a stronger indication to the Qs relative to Apple. So I thought I'd just pass that on to you. And case in point, that seems to have shown up in today's tonight's session. So coming into the PUG group, it's a matter of getting an understanding, and I think when you come here and you get this product, it's pretty well understood. You understand what a pivot point is. You understand what the PPS indicators are, and you get a working knowledge of what the indicators and how to put them together. These are kind of things and how we utilize these scanners. They're just, I mean, there isn't anything that what I find interesting is to get into a stock and I'm about ready to scale out, or I did scale out and I'm trailing a stop, and then it's on the news like, hey, look, the stock just broke out. And it's kind of like we're getting in with the institutions rather than after the institutions, it seems, more time than not. We seem to be picking up a lot of stuff consistently ahead of the crowd, which is kind of cool. How we trade it, different story. So, you know, there's again, all different ways, and anyone can make money in this market, I think. And according to my emails, everyone's making a lot of money. And you know, it's a matter of anyone can make money if they don't worry about risk. And I think the reality is, where do you put your stop? And how much capital does it take to take the trade? If you're a short-term trader and you have a system that says, hey, you're only going to be in this trade for a few weeks, you're only going to be in this trade till you see a profit for the next couple of days, or this trade might only be a week, you know, you can utilize option strategies, especially, you know, most of the products that we put out, most of the stocks in the S&P 500 are optionable anyway. So it's pretty easy to trade this information that's provided by these scans. So I think tonight's session, we covered a little bit of the gamut. I hope it was worth your time being with me. I always like going over and saying, you know, I just can't imagine finding and looking at anything other than this. I've tried through the decades, and I mean, honestly, everything, and people bring things to my attention. And we did this at the seminar at C's, where people asked me to look at two other fairly popular, I guess they're popular or they're heavily marketed by marketers. They're heavily marketed indicators that are popular. And, you know, it's funny because a couple people in the audience actually just simply stated, hey, you know, your stuff comes in early, which is fabulous. As an option trader, I want to be a little early. I want to pay low premium. I mean, I don't want to be months ahead of time, but I think it's important to be able to get in. You buy it when no one wants it, and you sell it when everyone's got to have it. Just remember that phrase. That's what I was taught. Buy it when no one wants it, sell it when everyone's got to have it. Buy it when the high closed doji and the indicators populate when no one sees it coming. Sell it when it hits the news. When they're talking about it on CNBC, then you sell it back to them. And that, you know, it's not 100%, but boy, I'll tell you what, you're always able to find better opportunities. I hope tonight's session provided you with some details. And now I will, as promised, go through what we have as far as the John Person indicators. We have current lifetime features, which lifetime members receive free updates on TradeStation versions. The radar screen updates, which we did the last one just a few months ago. Of course, we always have customer support. If something goes wrong, you give us a call. We try to help you out, fix it up. Access to video tutorials, just like tonight. Monthly meetings, generally with Jeff. And then I actually, again, this is a makeup session. I come in and do one for everybody, and then I like to do one for VIP to go over the special indicators. Tonight was a makeup. We still have a VIP pug session to come with. If everyone wants, we could do the VIP, but I'm only going to be talking about the indicators that come with the VIP package. There are two different VIP sessions. Some, this is what people wanted. They wanted to have access to our summer mentoring. So you had our online continued education events. You do have access to the monthly meetings. We did the summer mentoring session with using TradeStation. You have access to those videos. ETF review, LCC breakout tactics, option strategies, RS analysis is what we covered in the summer mentoring. This was a great class. It took 3 weeks, 2 hours each week, so it's 6-hour sessions, and they were recorded. Then there is the VIP annual membership, and this gives upgrades to my personal indicators and some of my personal scans. Many of you are asking, what are the personal scans? One is scan number 5. Next is, of course, my volume indicator. And the volume indicator is what has, I think, really kind of given myself a little bit better edge, and I've used this for a number of years in the concept of looking for bullish convergences and bearish divergences. Number one, it kind of acts a little bit faster like a MACD concept, but it uses volume. And what we look for are those little changes and those nuances. And if a market goes up and you get divergences and a market makes higher highs, and you can clearly see those divergences form both in the moving average component as well as the histogram. And you know what? I'll do a comparative analysis using OBV. So comparing an apple to an apple. A lot of times we don't find those divergences, like in this case, as you can probably see, with the on-balance volume, we didn't get the secondary high is actually higher. So this gave a false, didn't even show you divergence, right? This showed a clear, you can clearly see divergence, and we know not to buy that high. Wait a minute, something's wrong. It's making a higher high, and there's no volume. I don't know what the hell this is. White Horse Finance. Okay, so we did a video and warned several weeks ago. You guys remember seeing the video? We sent it out regarding, and I know we beat this up in the trading room a little bit, and my little rant about Costco and American Express and consumers' desire not to, if you don't have, they don't take American Express, and if you leave home without your Visa, then it's MasterCard debit. And when you go to the Costco and you got to pay cash for something and you're not using your credit card points, I'm here to tell you, people start thinking twice about shopping at Costco. It's something about, we're a credit society. I'm just telling you the psychological aspect of the market. And what was interesting is that the histogram component was showing divergence as Costco made a higher high. This also was relevant in another market called, this little guy that they sell a little bit of hardware tools and stuff, Home Depot. It did actually show up on the OBV, but more times than not, my volume indicator really helps smooth out those bearish divergences. It's a pretty powerful tool, and it's awesome for using as far as day trading. So I think even looking at the market when you do day trades, whether it's a 15-minute or 30-minute time period, you know, when you start to see the volume start to populate, it is something that I think is a relatively helpful tool, more times relative than looking at OBV. So with that said, that is a part of the VIP package. And just to let you know, this is something for VIP guys. If you're a VIP member, we are coming up with, you're gonna love this one, the Trilogy Scan. We are working on it. It is a pain in the neck. So it's a lot of work to get this right. What is the Trilogy? The Trilogy just means three things. Trend line, LCC, and a buy signal. Three things kind of have to happen in order to get a Trilogy setup. And I teach that at mentoring, how to look for it. And we do this at seminars, and we teach how to utilize this and look for these. And part of like another great type of Trilogy setup is taking buy signals above the blue line pivot. So it gives you that added confidence that if the market's going to move and break out, from where is it going to break out? It's going to break out and give us a Trilogy setup. So when you get a last conditional change, a PPS or a high closed doji, we have a high probability three things have happened, and it always occurs at those inflection points, and that's where you get in on a buy stop, or you get in on the first chance. Your stop loss goes underneath the bar that breaks out, and then you just ride the trade, scale out, and trail stops. And that's how you trade a momentum breakout. Believe it or not, that is something, it's to be released. I'm really trying to get this out this year, but we're saying 2017. That is part of what we do for that. And here's something else that you guys don't know, but VIPs, here's what else we are looking to do, and it's in the process right now of doing. Pay attention to this. If you're still with me and you're a VIP, you're going to want to look at this. Modular scans, drop and drag. You can customize what you want to look for. So, example, let's say you want to search for a daily low close doji, and I want it's a weekly, monthly, or a quarterly bearish session, and I want to scan for on a low close doji that the close is not just a low close doji, but it's below the weekly, monthly, and quarterly pivot, like I just demonstrated with XLV. The XLV had that like low close doji, right? It closed below the doji, and it was below the monthly pivot. Whoa. I mean, all right, you don't need that, but that maybe that's that extra confidence that you say, hey, it's below the blue line. Holy moly. Like, maybe instead of doing a 10 lot, maybe I should do maybe a 15 or a 20 lot, or maybe I should do 40 or 100 contracts. You know, whatever your size lot is, you'll have a little bit more confidence on that. And then the reverse is true for buy signals. So we're looking to expand to get the same information. I mean, I'm not reinventing a low close doji or pivots or anything like that, or the last conditional change. The only thing I'm doing is we are putting this in a modular format so that you can customize your scans. And that's part of the VIP PUG group. So it is something that it requires a lot of stuff, and that's what the PUG Club is. The annual membership is $749. The VIP is $1129. If you're interested and you want to find out more about it, try it out. Give Mary a jingle, or email mperson@personsplanet.com, or give us a call. And that concludes tonight's presentation and questions on how to get the indicators if you would like those as addition, and what is coming up. So it requires a lot of programming, and it does require a little bit of skill, but man, I am telling you something, it's fantastic information to get not just a good buy signal, but a high quality buy signal that we can sink our teeth into. And then it's just a matter of, you know, where do I want to put my stop, or how do I want to attack that trade. So with that said, I hope if I covered the gamut from A to Z. Thank you all for attending tonight. And for those that will be in our seminar next week, I am excited to teach and pass on some knowledge. And, hopefully you guys have had a good year so far. It's been an interesting year. There's no doubt about it. I know it's been tricky for a lot of people. There's a lot of people no longer in the business anymore. This year particularly took out a lot of traders. If you don't believe me, ask around. It's a fact. And in fact, just look at most hedge funds' performances. They were supposed to be doing good. Well, they weren't hedging. They were just trading all kinds of things, and their algorithms didn't quite work. But there are some that are knocking the ball out of the park because there has been some great trades. And there's been a lot of, I think what it is a lot of sentiment. The market has done, like I said, this particular year, since like all year, has made buffoons out of everybody. You know, as soon as someone says the market's going to go up, it goes down. As soon as you say to buy gold, it goes down. As soon as you say to sell gold, it goes up. Just for an example, buy gold because the world's falling apart. And I don't hear people talk about the gold trade anymore. It's just been a really interesting year. And I think that our indicators and our tools have kept us, for the most part, not just alive, but have kept us on the profitable side of the majority of the time for the year. So as I showed you an actual performance that I just started to do this to say, you know what, let's put this together, require a little bit of work. As you can see, I don't do much on the weekends. And, just see from a weekend product that we charge $49. It's like, this is a joke, $49. Let me just put for $49 to see if everyone followed these trades, if you could make money on some, one, or all. Doesn't matter. And let's just see what happens. And that's what I started to do, because every week I'd say, here's a high close doji. Everyone should know what that is. People didn't know what a high close doji was. So anyway, enough of my rambling. I thank you all. And for those coming next week, I'll see you then. Thank you.